Hi and welcome to the Market Alert for Friday the 18th of September 2020. So sell all things, tech wrecked, dollar dumped and snow flaked. Everything must go, yes, and we're heading that way for sure during this coming autumn. As things start to deteriorate globally, and I see headlines today in the UK as well of a potential lockdown, national lockdown for 2 weeks in October. Whether there's any truth in this, who knows? But as the saying goes, don't believe anything until it's officially denied. And they've been denying this over the last few days. So it looks like that's where the economy is heading once more, to a national shutdown. Which, as I've said before, we are looking at the perfect storm this autumn with the US election, Brexit, and now the potential for a second lockup as well. So let's have a look at the markets yesterday after the down day the day before. The markets on the pre-market part. Let me just move forward here. You can see that some selling came into the market. You can see a cluster of volume there. This is when the futures market opened at 7 a.m. Prices held at the S3 and then traded to the BRN and then started to move sideways as the market opened. That was as much volatility as we had, and then prices put in a potential sell signal. You can see the volume building there and then spike down and then spike back up, and again you can see there huge volume as the market finds buying support to the left of it. And this was the last time we saw this low as prices started to move higher, but unfortunately it ran into a lot of selling at this level, which we see over on the left, and prices were then sent down. And the problem here is the stop being at the S3 and really needed to be below this low in particular, if not to this one where the buying came back. So the trade was stopped out prematurely as the market then turned around, and you can see them buying back in here, testing the market at the S3 and then moving prices back to the upside. And that's one of the problems of volatility and the stop loss, where it's automatically placed and at the start of a session, where it could be worth moving the stop to the recent low, recent high, and then adjusting the bet per point accordingly. So prices then continue to trade all the way up to the 200 MA after closing back above the 5 bar, and got the support of the S3. And as I've mentioned many times before in the Market Alert, 99% of the time the market will find support at the S3 and reverse because it's overstretched in a sort of standard deviation way and then needs to get back to the mean, and that's what we're seeing here. So prices through the 200 MA and then trading sideways. They're closing back below the 5 bar moving average, but finding support at the 200 MA and then trading sideways all the way up to the next BRN, where you see the potential weakness coming into the market there. And then again, potential weakness heading back to the low. They want the market back above the low if they can in a bull market. And here we have another potential entry with the low looming and the S1, and also the weakness that we see to the left. And yet again, the market manages just to get through here and then is slammed back down. So that was the second time this happened, where there was some selling in the market. This time it went below the recent low, and then prices reversed and moved back to the upside of where they should have gone in the first place when entering the trade here, back to the low, because we know that this is powerful. But they had to shake out on both occasions before the market was free to move higher. So down in the morning, the market then puts in a potential buy signal for the afternoon, and it was a case of holding this trade for as long as possible to make up the losses of the morning. And you can see that's what I'm doing. And then just at this point, you'll see, I'll just move a bit further, you'll see the volume starting to build as prices then start to come back. You'll see it in this bar here, and there's 30 plus points on the table, which is much needed to recoup and decide to take the profits off the table. And then prices continue, of course they do, once out, So well over 60 points now on the table, but prices then pull back. We've still got the DP in sight here, and the Dow as well. If we just have a quick look at the Dow, let me show you this. You can see the Dow was ploughing ahead strongly, so there was no real issue there of momentum to the upside. We had a potential sell signal which wasn't filled. Then we have the buy, and then the market moves up another 30 odd points to the DP level, which would recoup all of the losses, and then you'll see prices turn and continue back to the upside there, having closed back above the BRN and the 5-bar moving average to trade up once more to the left here, the resistance you've got to the left there, and trade through. So yeah, morning not so brilliant unless you re-entered the trade after the market did the shakeout and retested, closing back above those levels, the S3, the 20-bar moving average, and so on. And then in the afternoon, making up for the morning's frustrating start to the day. So overnight, let's have a look at the daily chart. You can see there the DAX coming off the low yesterday. You can see where it's trading among the fibs. It traded down to 50%, and again, combined with the S3, the market was able to be pulled back, and then through the 62, and now it's free to move ahead towards the 78. You can see overnight already prices have had a look at the previous day's high as well. So let's have a look at this in more detail. Here you can see the kickoff in the early hours, the market above the high and trading down to the DP, which it then bounced off and is currently again sitting looking to want to take out the high. It's above the 200 MA and the DP there as well. Let's have a look at the implied volatility. Managed to get this up and running again. We're down at 21.22, below the 10-bar moving average, as you can see there. And we're back in the amber range here. We've gone from red, so the correction move seems to be over at the moment. We're looking at this sort of picture here where we had the spike up, and it looks like that the DAX and the Dow could then move back to the upside as well. News for today, nothing major. These are just the normal sort of news items. 7 a.m. we've got retail sales from the UK, and then over to the US for the CB leading indicators, and prelim UOM consumer sentiment. That's out at 3 p.m. And what else have we got? Let's have a quick look at silver. Yesterday the market came down really close to take out the stop on the trade that I have here, but didn't fill it and move back up. This is really strong actually. Each time it's come down to these levels and tested, we can see there's a defined sideways level range now. It's just a matter of breaking out and taking out the high to the left there. So consolidating still at the moment, but I have no doubts about where this trade is going in the long term, as we can see in the monthly chart, back to the all-time highs like gold did. It's just delayed a bit here, but once it starts to accelerate, then there's a good $30 on the table there of movement, which is a lot in profit terms. Okay, that will do it for this one. And as we head into the weekend, let's hope the volatility picks up a bit for this morning's session in the DAX, and also this afternoon. Okay, that's it. Have a great weekend. As ever, thanks for watching. See you in the next one.